Welcome everyone to the NTC. This is the Technology Advices Tech Tavern. Thank you for coming and braving the weather. We really appreciate it. Despite all the floods, you all made it. Thank you. The NTC exists to be a catalyst for growth and influence in Middle Tennessee and the technology industry in Middle Tennessee. The AdvoTECH panel discussions are around policy and the issues of economic opportunities and the barriers in our region presented by the Nashville NTC. We really thank you for participating. Today is our second AdvoTECH panel discussion, and we're excited to have a number of them throughout the rest of the year. Today's program, we have a number of distinguished guests on the panel. I'd like to introduce him to you right now. David Gerregano, Deputy Commissioner of Tennessee Department of Revenue. Paul Fassbender, Managing Director of Public Affairs at Asurion. Mark Loftis, CPA, Director of State and Local Tax at Crosslin and Associates. And Bo Spessard, at the COO of Emma. Thank you all for joining us. We really appreciate you participating in the panel today. Obviously today, this panel discussion is on Tennessee software sales tax. Uncertainty is a barrier to business investment. In 2015, Tennessee began to more broadly assess tax on the sale of licensed software. This has caused confusion for business and provide software as a service, provide software services to clients that reside out of state or have users in multiple states, and those that provide software maintenance contracts. Even though the Department of Revenue has issued a number of clarifications to the law since 2015, we've heard from a number of our members that they're having difficulty better understanding how the law applies to their business. That's what we're here to talk about today, and really that's really the purpose of the AdvoTECH series, is to provide an overview of policy, discuss the impacts on local technology providers, and then unite under one common voice. And really, we're here to build relationships with policymakers as well. A lot of what we've been hearing from our members is that there's a lot of policy that's impacting them, but they don't necessarily have those relationships. Larger members may have folks that they have on their staff that work on policy, but a lot of you don't. And that's what many of you are looking to the NTC to provide guidance, both on education and to speak as one united voice. So thank you for attending, and thank you for participating today. Show of hands, how many have taken the poll, the iCitizen poll today on the software sales tax? All right, you're guilty, it's all right. I do want to tell you about that because the iCitizen, what we're really lucky to be able to have locally is a local service that helps us be able to connect on policy issues and really better understand the public and our members' point of view on a number of issues. Since the last AdvoTECH policy discussion, we had a very good discussion on broadband and technology surrounding broadband, and had over 100 respondees on telling us their opinions on broadband. Software sales tax is a very important issue that I know impacts a lot of you. Maybe just a show of hands. How many of you and your companies create software? Great. How many of you sell software, sell that software as a product? How many sell it as a service? How many of you don't know? All right. Show of hands, no one's recording this as far as personally. How many of you sell more than $500,000 in software per year? Okay. And how many of you were aware of the software sales tax changes before they became law in 2015? Okay. All right, well this kind of is a good kind of foundation for our discussion today. The state of Tennessee collects about half of its revenue in sales tax from the numbers that I've been able to find. Tennessee has a 7% sales tax on sales and on use. And it's 5% just on food. And local governments can add an additional 2.75 more to that sales tax. Before 2015, that sales tax applied to the sale of prepackaged software or games, whether you bought them in a store or downloaded them online, but didn't apply to software primarily used and accessed by the internet. The Tennessee Revenue Modernization Act that passed in 2015 marked the date where the state began to collect on the sale and use of software, regardless of how the software is purchased off the shelf, downloaded, or used remotely. Specifically, the law says that the taxable use of computer software in Tennessee includes access and use of software that remains in possession of the seller and is remotely accessed by a customer for use in the state. This provision ensures that software remains subject to sales and use tax regardless of the customer's method of use. That's a lot of legalese, but what about when the software is provided as a service? How do companies determine whether the software they write and sell is a product or a service? How does this impact companies and the people doing business inside the state and outside the state? First question I'd like to kind of pose to our panelists is how, for those that are companies and companies that support their clients in these issues, how did your company learn of the change in the law, and what were your immediate reactions to the news?
All right, I guess that's me. Hey, thanks for having us here. This is a really cool spot, by the way, NTC. I hadn't been out here. So we, I probably bumped into Brian about in March or whenever. He's like, hey, man, just so you know, there's this new law that's going to be coming down that may affect you. and it was, so we have a software service that we deliver over the internet throughout the country and throughout the world, and so we have seen this over the United States kind of start happening, right? So you got certain states that tax software as a service, and you know that. So if you're in there, you have Nexus, you got to deal with that, and that's just a reality. We haven't had that in Tennessee, and so but when it kind of came up that may be the case, certainly a concern for us. While we do have the majority of our customers are spread out through the United States, a lot of them are in Tennessee, right? We're a Nashville company, and a fair number of our customers are in Tennessee, and so therefore a large portion of our revenue comes from Tennessee, and so therefore, we would be seeing a substantial tax if it were to go into place. So we kind of watched it. We didn't know exactly how it was going to play out. We didn't have any fancy people in the legislature to kind of work for us, but as a small company, we did know that Asurion and some of the other players out there were watching this as well. So I came to know it really through NTC, and also we work with the law firm here in town, Fassbender, and Mike Sontag down there had kind of kept me abreast of it as well. So that's how we came to know about it, and then we didn't know what to do, to be quite honest with you. We worked with accountants, lawyers. No one was 100% sure how it was going to play out, and so we just kind of sat on our hands for a little while, which created liability, right? Potential liabilities. We were not taxing or collecting the tax that maybe we were supposed to. So that's how we came to know about it, and and that's kind of I'll leave the story there.
I'm not fancy. He's got the good lawn for. We are a bit larger company, as most of you know. We had accountants that were monitoring the developments, and they alerted me when we started digging in and saw as the law is drafted, the economic hit on our company in general, given the breadth of software we use, not only internally, such as HR software, but also to develop software and platforms that we actually use that the consumer has nothing to do with. I hired up a lobbyist who went down, and we both engaged with the state. David and Barbara were great. I mean, they're not on the skewering block here, but the state, from Asurion's perspective, because we are a larger company, we do deal with all 50 states, territories, and international. We do have to look at tax as an inevitable beast. No offense. He just collects. He doesn't assess. But we have to look at tax as inevitable, but it's what range of tax and how is it going to hit our creation. And business is business. And, I used to work for ECD. I have a heart. I love Tennessee. And I promote the state, even in the private sector. But what we had to do was assess what we saw and think, hey, do we engage on this? And it was, yeah, we do, because what this would do was hit our growth in a way that we may have to look at moving some of our operations out of state. And so at that point, we do engage and hired up a lobbyist. You can call me fancy if you want for that. But
I'm just picking on him. He just looks
you're
fancy.
You're the one who, yeah, that hurts. But we hired up a lobbyist and engaged that way. Yeah.
Mark, how have your clients reacted to the legislation?
Well, I think mostly clients react initially when they found out that this was inevitable or coming down the pike. It was confusion. I think there was some confusion on exactly how far this was going to go, how it was going to be interpreted by the state when they're audited, and we found, and David and they have been really good at trying to keep us informed through TSCPA and a lot of other different areas on what's coming down the pike. So it's been really, I think they've tried to do a really good job. But I would say the reaction was a lot of people didn't know about it just because they weren't plugged in, I guess. But now that it is more known, people are trying to wake up and figure out exactly what they should be doing. And it's been in effect over about right at a year now. So I'm sure as the audits start coming in, that's when the potential conflict will come about.
And of course, helping companies better understand what that policy is and how it affects their business, I understand is very much part of what the Department of Revenue is working on, and you have put out 3 notices already, at least on two, to better understand those. Can you tell us a little about those public notices?
First of all, thank you, Alex and Mark, for having us here. If I could spend just a second before I get into that, of giving a little perspective way we view this, how we approach this. You mentioned 50% of the revenues from sales tax, and that depends on how you count it. The taxes we collect, it's actually about 61%. To give some perspective to that, the next largest set of taxes are franchise and excise taxes, and they're only about 15%. So without a state income tax, sales tax is the big driver of the state's budget and the services the state provides. And I like to again put it into some context, point out that 72 cents of every dollar that's remitted in sales tax, you make a purchase, it's a $10 purchase, and you give the vendor $1 in sales tax. 72 cents of that dollar goes back to the local government directly, at least 72%, in the form of K through 12 education and money that the state sends to local governments to fund their local services. So the amount of sales tax that collected is not just sort of theoretical or abstract. It has a direct impact on your local community. And we have to protect, the sales tax base and make sure that we're able to collect the revenues that come in. So I'll talk a bit more about that in a minute, but kind of what I wanted to get into is, so we consider, when we do our strategic planning, and I'm sure you all do that sort of thing as well, we look at who are our customers, and certainly local governments, state agencies, education, we consider those our customers in terms of we have to collect the revenue that they depend on to provide their services. But taxpayers are also our customers. So I think this sort of really brings that into focus, because there's really 2 things going on here. It's continuing to collect the revenue that's needed to fund K through 12 education, police, what have you, but also doing it in a way that protects customer service to the taxpayers who have the obligation to collect that tax and remit it to us. And we need to be able to appropriately fulfill the needs of both those customers. And so I think this really brings that into focus. So we're happy to be here. We're really interested in hearing what you guys have to say. You don't necessarily have a chance to interact with us a lot directly and vice versa, so it's a great opportunity. One of the things we've done on the side, to address your question, Alex, of addressing the needs of our taxpayer customers is, we understood that this was a challenging topic. The reason we brought the legislation was software has been taxable for decades, at least since the mid-'70s. So there's a clear policy to apply the sales tax to software, just like other items that are bought. And about 2007, we started seeing a shift in sort of the way software is provided. The first were rulings that came in about application, maybe this term's still used, but application service providers. In other words, instead of transferring the software to the customer, we'll keep the software on our server and just let them access it and use it. But it's still the same product. It's just a matter of how it's delivered. And the questions started coming into the department as to whether that was taxable. And based on the way the statute was worded, it didn't encompass that. So we knew we were going to have an issue potentially there, because the same product, whether it be some sort of office productivity product or a spreadsheet or tax preparation software, whatever it may be, same product would be taxable or not taxable purely depending on how it was delivered. And we knew that was an issue, but we had to follow the statute as written. And then fast forward a few years, it's grown, and it was decided as a policy we need to bring some legislation to tax it the same product the same way regardless of how it's delivered, and that was the Revenue Modernization Act. And our feeling has been there's going to be a lot that's clear. There's going to be a lot of products that are clearly software, whether it's word processing, a spreadsheet, tax preparation software, what have you, clearly taxable, even when delivered remotely. And on the other end of the spectrum, there's going to be things that are clearly services that have never been taxed and we don't intend to tax. Information services, I'm an attorney, I use Westlaw. That clearly software is used to provide and receive that service, but just as clearly that's a non-taxable service. So our belief is there's going to be a lot of things on either end that's going to be clear, but we also acknowledge, and this was discussed a lot in the legislative process, there's going to be a significant amount that's in the middle that's not as clear, and I think that's kind of what we're here to talk about today. So to fulfill our need to provide the customer service to the taxpayers, we issued 2 notices. And a notice is just something initiated by the department to put information out there to folks. It's on our website. We distribute it through social media, listserv, to practitioners like the TSCPA, through the TSCPA and otherwise. And then we also invited, if you read the notice 1514, we invite people to ask questions. And we have a revenue help function on our website. You guys probably know better than I do about those things. But where folks can search for information, and if they don't find the information they need by reading the notice, or et cetera, they can submit a ticket, a help desk ticket that goes to a person in the department to answer. And it's a drop-down box. So we added to that drop-down box remotely accessed software questions and routed those through that function to a specialist. So you're not going to go to a general sales tax person. You're going to go to someone who's a high-level person in the department. Frankly, it's an individual who's done sales tax for 30 years, does nothing but sales tax, and is an expert in this area, and she's going to respond to those questions. So that's one thing we did. We also, and we directed people to that in our notice. We also knew that there would be rulings. Folks like Mark and his firm are very familiar with the rulings process, where you can write in and ask your question in a more formal way and receive a formal ruling from the department upon which you can legally rely. And we've gotten 6 so far. We put those out on our website in redacted form. We do have to protect the confidentiality of the taxpayer, so we do have to take out identifying information. But we've put those out there. You can find those through the Revenue Help by searching remotely accessed software. And we think those are a pretty good resource. We put a lot of work into not just answering that taxpayer's question, but putting as much explanation and analysis in there to sort of provide information to the other readers that may be looking at that ruling.
So kind of, because this was something I learned about this process too. So there are these kind of 2 types of clarifications. One are the formal notices provided by the Department of Revenue that just further explain the legislation, and then you have the rulings on a case-by-case basis for different entities that have requested clarification. And
if you don't want to do either of those, you can simply submit a ticket
right.
through the help function and get a response, timely, a quick response from a person who's been designated that responsibility of answering those questions.
Right. Mark, has that process helped your clients better clarify what applies and doesn't apply to them?
Yeah, it gives some certainty when you can actually hear from the department in a official way about how they view that particular situation. So it's very helpful. I think there is you know, I guess the rub, I think, is going to be as time goes on is the view. I know, and I'd like to hear David and you guys talk about, I know, what is the true object of what I'm selling and how the state is going to view that, because I can foresee taxpayers are going to want to say, hey, this is a non-taxable service. I'm just using software to deliver that. But when the state comes in, they're going to, I would say there would be a issue with an auditor coming in and saying, no, this is software, and here's your assessment. So I think that's what we're all talking about here. So the true object thing is what I'd like to hear a little bit more about.
Just to follow that, so if someone were to go onto the website, ask the question to the software as a service individual, and she came back with and I don't know how that works, but came back and said, from our perspective, your business or what you're selling would not fall under the Tax Modernization Act. And I don't know if she'd say that or not, but assume she does. Yeah. And then an audit occurs. And the audit says, actually, it is taxable. Is that, I know it hadn't happened yet probably, but how are those going to?
So, I mean, to give you the full picture, if you wrote into us for a letter ruling is something that's in the statute that says Commissioner can issue letter rulings to specific taxpayers on specific facts. That is the most sure, because by statute, that is legally binding on the department. Again, on the facts as presented. Now, if the facts are different, that's a different matter. But that is legally binding, and unless and until that's revoked, you are absolutely legally entitled to that treatment. If an employee of the department simply tells you something, does not have the same legal effect. However, if in practical terms, if you are audited and you have something from this person who's, again, a 30-year veteran, has a high-level position within the department, and you've accurately described the facts, and she has given you an answer, you don't need to collect tax, that is, while maybe not legally binding, that's going to have a practical effect of what we're going to do is say, well, that was wrong, but we told you that, you need to start collecting going forward. That's the practical reality. Now, if it's just a conversation and someone says, well, I talked to somebody who works for the department and they told me this, that's a different, that's a different matter. But
That does not work.
Get it in writing.
Get it in writing.
So have any of these rulings or the law changed how any of you all actually conduct business? Whether you're trying to, I don't want to say avoid, but avoid paying taxes in certain ways, or just starting to assess tax?
To go back to my earlier point, it's just a reality, having a business that is selling software as a service throughout the United States. Every state has a different stance on it depending on what that state is trying to do or what they need to do. I know there's some talk of a federal, there's been that, and you can probably speak to that better. So, we've just been used to trying to work with our accountants. We've also implemented and now I'm going to forget the name of the company that does the state-by-state tax stuff. Anyway, so there's a software that can help you with your state taxes. You'll hear it on NPR. No, you'll hear it on NPR. I'll get back to you. But anyway, so we've... starts with an S. I look like an idiot up here. I should know this. No, yeah, thanks. But anyway, so we've started to implement certain procedures that help us understand what the state taxes are in different states. So that's something that's just a reality to our business. And so, we kind of knew that Tennessee was going to fall somewhere in there. So just, kind of looking at the states individually where you have nexus. Obviously, we have nexus in Tennessee. Nexus typically is defined as having an employee or substantial business occurring in that state. And it also can be in actual municipalities, right? So I think I think we've got an office in Portland, Oregon, and they tax specifically in Multnomah County. So and there's just so much that is difficult to understand and manage, especially at a smaller business where we've got a FP&A crew of 4 people. To manage all that, it gets a little complicated. But
I think our accounting team is watching on how it plays through with the rulings. I think as a larger company, I know that some of the taxes we'll just have to eat, and we'll see how far it goes. To the federal, I agree with Bo on part of it, the federal part, the Internet Tax Freedom Act, is that what you're talking about? Last I checked, they did not address SaaS in that legislation. It was just simply the play against the brick and mortar and the internet sales. That's not happening this Congress. Nothing's happening this Congress. So maybe look to next go around. But we are just monitoring, watching, and seeing how their process plays through.
Organizations like the NTC and the Chamber, we spend a lot of time trying to recruit companies to come to Tennessee. Do any of you have any thoughts on how this policy might impact a company's ability or desire to come to Tennessee, knowing that there's this nexus issue?
I think that realistically, that a lot of the new businesses are starting are going to be some sort of as a service, whether it's platform as a service, software as a service, whatever it is. It's just a reality of if you're going to start some sort of a technology business, that's what you're going to do, because your valuation is going to be driven by what's your multiple, MRR, monthly recurring revenue, and it's just the way that people are doing business right now. So yeah, people are going to look at this and they're going to say, okay, it's going to be confusing. So if I'm going to be in Tennessee, or should I be in North Carolina, Raleigh or Nashville, where I know that in Raleigh or North Carolina it's X, and Nashville I'm not really sure. Maybe it's X, but it might be Y, and if that's the balance you're making, and especially if you're the size of an Asurion or something like that, I'm probably going to lean to North Carolina, I think. Now, I'm kind of making that up, but I think generally speaking, it could be a big bogey in a really large company.
Yeah, it could be. Depending on what you're doing, you might look at that on the front end and say, hey, there's a lot of confusion out of here. You could get your figures that this could cost $4 or $5 million a year to your bottom line. And that, when you start talking large numbers like that in a big company, and it makes the process pretty easy on what to decide. Now, if you're not working in software at that level, it may not impact you. It may just say, hey, Tennessee's a great place to do business anyway. I think what we were seeing in other jurisdictions, I think Chicago assessed a tax of their own, maybe. Yeah, some cities are looking at weighing in on an actual specific SaaS tax. You get confusion like that in the marketplace, and businesses generally tend, the ones that are here the ones that can move their operations easily may do it with confusion. I think what the department is doing by clarifying it in rulings will be very helpful to that process.
On the city piece, I mean, that's just because Nexus is not really well defined. So you could literally, because you were at a conference for 2 days in Chicago, potentially have Nexus there and therefore be liable for some tax. I mean, it gets pretty confusing.
Yeah, and our sense is the feds aren't going to weigh in on this either. So when you have that vacuum, the states and localities will fill it if they can, and if they see a way to make money, and if they're having a budget shortfalls. I mean, that's the big one.
And the other reality is, when you think about having a SaaS type business, and I'm going to speak to the smaller businesses, the startups, a lot of people want to work remotely, right? We got 170 people. Of those 170, we have an office in Portland, we have one person in New York, and then we got people scattered around, and they're like, hey, I'm a great developer, I want to live in North Carolina. Okay. The lead developer says that's fine. HR says that's fine. It's like, okay, great. Well, hold on. That means we're going to have Nexus in North Carolina. So that means that if we sold $1 million worth of services in North Carolina, we could potentially be liable from a SaaS tax standpoint, or whether it's North Carolina, or whether it's Utah, or whether it's Minnesota. So all that stuff kind of comes into play as a small company who's looking to retain talent that maybe we can't get here in Nashville because it's getting better as a result of a lot of the work that we've been doing over the last 5 years. But the reality is, you want to hire somebody out of the Valley or hire someone out of Seattle, and they want to work from there. It's easy to do, right? Because they can do all the stuff they need to do. But you got to be careful in what state you're going to jump into. So that's something you gotta kind of have to have your eyes open about.
So today, folks that work and create their software here in Tennessee may actually be at a disadvantage as compared to those who provide it outside of state and sell it to folks here, right? So if I'm a provider of a software service or whether it's a product or a use product, I think I have to charge effectively almost at max 9.75% higher potentially than another company selling the same service. And I've read recently that the governor's asking to figure out ways to kind of level that out. I think you're working on that.
We are. I guess what I'd point out first is that is true, but it's not unique to this product. This is a bigger problem. This is true with respect to whether you're buying a shirt or a book or whatever it may be. So it's a broader topic of the fairness between local sellers and remote sellers, and that's been something that states have been trying to address for really at least 2 decades or more. And we obviously at the state believe that there should be parity, there should be fairness in terms of if a local vendor has to collect tax on the sale of a product, then their competitor who happens to be in another state should also have to collect tax on the same product sold to the same consumer. There's been federal legislation, has already been referred to, that's passed the Senate but not the House, and nobody knows exactly when or if that may move further, probably not soon. States are beginning to look at adopting legislation or rules, frankly, to challenge the Supreme Court decision from 25 years ago that sort of created this situation in the first place. So that's an ongoing, and Governor Haslam has been a supporter of that marketplace fairness, that fairness between the local seller and the out-of-state seller. So that's a bigger issue, again, not unique to this product. As far as the Revenue Modernization Act and treating remotely accessed software sales the same as sort of delivered software sales, that's really a matter of the same product should be taxed the same regardless of the mode of delivery. But all that said, you're right. Any in-state vendor who competes with an out-of-state vendor on sales of any product has an issue in terms of if that out-of-state vendor doesn't have nexus and we can't require them to collect.
Do you want to say any more about that process that you're looking into about whether or not it exists a nexus, or whether or not companies outside of the state will end up having to pay down the line?
Well, I'm not sure what else to add. There's the possibility that it may be addressed by Congress. There's the possibility that it may be addressed by the courts. The U.S. Justice Kennedy, in a concurring opinion in a related case, not directly on point, took the opportunity in his concurrence to invite states to bring the question back to the Supreme Court and have them look at it again. Now, he's only one justice, but it was a very explicit invitation, and he said in his concurrence the court needs to look at this again.
Because otherwise we have kind of a patchwork of states that apply the tax and don't apply the tax, and then effectively software companies like the folks sitting up here decide, oh, I'm going to go build my business in a different state because then I don't have to worry about paying additional tax. Okay.
Real quick, Avalera is the name of the software. So, and I didn't even have to look at my phone or anything. It just came to me. That's how smart I am.
It's true. He's smart.
Can we get just like a novice or remedial understanding of how this tax applies to software as a service companies? Because we haven't really said that today, and I'm a product person, not an accountant. Thanks.
Mark, I don't know if you might want to speak to that.
David, you want to do it?
So, all right, try to address it. Again, software for a number of decades as a product has been taxable. Not to get too much in the weeds, but the sales tax applies to tangible personal property. There was a Supreme Court case, Tennessee Supreme Court case back in the 70s where the state said, well, we think software is tangible personal property. You know, at that time you probably went and you got it on a disk or whatever the technology was at that time. And the Supreme Court said, no, actually it's intellectual property. It's not, doesn't meet the definition in the statute of tangible personal property. And the legislature immediately came back and said, well, we want to tax it anyway. That we, as a policy matter, the state of Tennessee applies its sales tax to software. Okay. So, and that's been the case. And it's been amended a little bit along the way as technology changes, but it's always been taxable. Technology changes further and the software begins to be, streamed without being downloaded or actually delivered to the customer in Tennessee, but it's still the same use of the same software product. And so the Revenue Modernization Act updates the statutory language to say sales tax already applies to the sale or use of software. Use includes, we're updating the statute to be clear that use includes using that software even if it remains on the server of the vendor. You're tapping into it, you're using it in the same way. That's a taxable use, just like the use of software has always been taxable. That's what the legislation does. So what we're saying is, in those instances, remotely accessed software is defined as software that remains in the possession of the vendor, the seller of it, but is being used by the customer. That's remotely accessed software, and that is a taxable use of software. So whatever you're charging that person to use it, you need to collect tax on the use of the software, on the charge for the use of the software. Now, then the question became, well, what if 10% of my users are I'm a multi-state company and 10% of my users are in Tennessee and the other 90% are spread out among other states. The statute says for remotely accessed software, in that case, only pay on 10% of the price you charge because 10% of the users are in Tennessee. And we've addressed, in that, actually that's the topic of the second notice. It's notice 1524, I believe, if you want to take the note. Addresses how the vendor and the purchaser deal with that situation. The purchaser can provide the vendor with an exemption certificate that says to the vendor, hey, I'm certifying to you that 90% of my users are out of state, therefore 90% of the price is exempt and only tax me on 10%. As long as the vendor has that document from the customer, then they're free to charge only 10% of the, tax on only 10% of the price. And they've met their obligation. Or if the purchaser in Tennessee, we've provided for what's called a direct pay permit, basically permission for the consumer to directly remit the tax in that situation. Again, only where they have users in multiple states, so it has to be apportioned out. If 100% of their users are in Tennessee, then there's no need for a direct pay. They just need to pay their vendor, and the vendor needs to remit it. But in those situations where some of the users are in Tennessee and some are out, the purchaser can provide, and there's a form on our website, it's a blanket direct pay authority for that purchase, provide that to the vendor, and the vendor's met its obligations, has nothing to worry about. Just make sure you keep it. Make sure you say, for this sale, I had this direct pay permit from my customer, and then you don't have to collect tax or do anything further. If we want to look at whether tax was properly paid on that transaction, we will go to the purchaser because they said, I'm going to remit it directly myself. So we'll go look at, we'll go talk to them about whether it was remitted or not. Does that kind of answer your question? So that's the tax we're talking about.
Yeah. What's the definition of a user? Is it an individual or a company that purchases it?
Okay. Well, it's in terms of the apportioning it among the states. It's the person. How many employees do you have using that product, and how many of those employees are in Tennessee? How many of those individual actual users are in Tennessee?
What if you're a purchaser that says none of their users are in Tennessee? Is there anything you need to do in that case?
No. No, because they're not remotely accessing any software from Tennessee, so it's just inapplicable.
You define software as service as sort of a singular, unitary, discrete. Defining SaaS as a singular, unitary, discrete, as a use. Well, there's also platform as service where you have multiple software packages that are serving an industry sector, some vertical. How would the department frame that? Are you talking about the assessment of the tax on each software component of a platform? That, regardless of whether it's in state or out of state, the point is the assessment of multiple softwares in a platform versus one discrete box as SaaS. How would a department look at that?
You're gonna have to understand, I'm not a software guy, I'm not a tech guy. But when I hear that you describe that, I think of multiple products. And in the past, you might have sold multiple software applications, and that would be, it's like, maybe it's a crude analogy, it's like selling 5 shirts to somebody. You've sold 5 items. If your product is software and you have 5 different items, one is a accounts payable, application, and one is a human resources application. To me, you got 2 different products there you're selling. But at the end of the day, if you sell 2 products that are both taxable to your customer, then you just you collect tax on the charge for those 2 products. Just, again, crude analogy, but just like if you sold them 2 shirts. Does that help? Yeah.
Question, when you were answering this question, you talked about remotely accessing software on the server. Does the server location have anything to do with whether or not it's taxable in Tennessee? If Paul and Bo move their servers to another state, does that make it non-taxable in the state of Tennessee?
In the context of remotely accessed software, it does not. Okay. It doesn't matter where the server is located. Now, Nexus may come into play, that previous discussion. If it's on an out-of-state server, because the company's out of state and the company doesn't have Nexus here, then that's a collection issue. And it's still taxable, by the way. It's just that we can't get that's actually a really important point that I left out. So if I could divert back to Nexus. If you're talking about a local seller of remotely accessed software versus a remote seller of remotely accessed software, the product is taxable either way. The issue over Nexus is, can we require that remote vendor to collect it for us and remit it to us? If they don't have Nexus and we're not able to require them to do that for us, the product's still taxable. It's just that the purchaser has to pay the tax directly to the state, and it's harder for us to maybe collect in that situation, particularly with consumers. Now, if it's a business purchaser in Tennessee, we're much more likely to get the tax than if it's an individual consumer. So I'm kicking myself for not pointing this out in the prior context. Regardless of whether the vendor has Nexus, the purchase is subject to tax. It's merely a collection issue. And again, with businesses, if you're a business purchaser of remotely accessed software, we're a lot more likely to get tax on that anyway. So it's not taxable versus not taxable. It's always taxable. And then to answer your specific question, server location in this context doesn't matter.
To that point, what recourse does the vendor have if they sold something and didn't collect tax on it, then they get an audit or something that says that's actually taxable? What recourse do they have back to the actual purchaser?
Okay. Ask it again, I'm sorry.
So if you sell something, you don't collect tax on it, you get a ruling that it's actually taxable. Right. Who pays that bill?
Well, the vendor is liable for the tax, again, like any other product. From our perspective, is no different than any other products that are sold. If it's a sale of a taxable product and the vendor does not collect it, then, and we audit the vendor, then we're going to require the vendor to pay the tax on that. The vendor can legally collect it from their consumer. Now, we know that's not always easy, may not be always popular from a business perspective, but legally, the vendor is entitled to collect it from the customer.
You're talking about a vendor with a nexus to the state of Tennessee, right? Yeah. Okay.
And then the other reality about your question back there is, right, I mean, a lot of us that are in product or technology, you're going to be using some sort of, whether AWS or something like that. I mean, not that SunGuard and VTech are going away, but the reality is, like, as we're developing new product, it's a lot easier to put it up there, and so I think that was probably the next thought from your standpoint. And obviously, the state and other states are aware of that as well.
Corey?
So how, from your perspective, how does Tennessee currently stack up in comparison with other states where this is incident? And then, just for clarification, this is on B2B and business to consumer software. And then I guess the third question here is, what about platforms that aren't exactly software per se, but software enables their purpose? So YouTube, right? It's user-generated content, but there's obviously software behind that. Well, so maybe Hulu would be a better example, or Netflix, because there's a monthly subscription involved with that. So the software enables accessing the content, but it's not exactly a software. I don't know if that qualifies as a software as a service. Yeah, but the content is not. You're not. Well, I guess you're paying for the content. Right. Exactly. Yeah. So, thanks.
Yeah.
Go ahead. Sorry about the mics.
Yeah. I mean, my thought was, I mean, there are some rules on digital products. I know that Tennessee has passed, and basically they're saying that's taxable. So I think Hulu and all that kind of stuff would fall into that, if I'm not mistaken.
That's exactly what I was going to say. We addressed that legislature addressed that a few years ago in terms of that content, movies, books, and music. And it's analogous because obviously the sales tax is always applied to books and records. And if you go and you buy a movie on VHS, it's always applied. But technology went beyond that, and then all of a sudden we're streaming it. And so something that has always been taxable, that's part of the tax base that the state and local governments rely on that revenue, all of a sudden shifted to be not taxable simply because it was streamed instead of on paper. And so the legislature came and said, well, we've always taxed it. We've always meant to tax books. Doesn't matter if it's on paper or digital, it's still taxable. And so that was addressed a few years ago, and this is analogous to that. Otherwise I don't think YouTube, for example, would be YouTube's not selling software to anybody.
I think the second part of part two of your B part question was about how Tennessee stacks up. And I know that Texas is one that has a clear SaaS. They'll tax on SaaS, but man, it's just there's so many different ones, and you've got to figure it out. So I don't have it in my head, but we do kind of have at work with working through our accountants and lawyers, the states that you need to be careful of certain types of tax and what that nexus looks like. So it does get pretty complicated. But some of again, back to the decisions that you got to make is, all right, if you're going to have someone in that state, you're going to have a salesperson in that state actually traveling in that state, is where you're going to create that nexus. And they're also, some of them have an amount. So if you sell over $250,000 in that state, that puts you one step closer to taxability.
Texas is a big competitor in terms of business improvements for us. So from that perspective, you're saying they are more competitive or less competitive than Tennessee stands today?
My understanding is that Texas has a software as a service tax, and that speaks specifically to this. Now, I don't know the ins and outs of that Texas tax, but I think they are a little more aggressive from that standpoint. So I guess you could say that less competitive. I don't know. You may have better.
Texas is competitive anyway. I mean, just as far as economic development goes. This morning I looked for a chart to see where the law in all 50 was at currently. I did not find one. I know it's been in flux, especially the last few years, just because of all the changes in how you all and we do business. The one thing I would say is because it is a hodgepodge, it's the state. I don't believe Nevada has it. Well, I'll just use Nevada as an example. We have a facility there. You know, when you have a state with a pretty strong startup culture or trying to develop a startup culture, I know Nevada has touted their lack of taxes to woo California companies like Tesla over to that side of the border. It's going to be a state, if you're talking competition, and you know this, it's going to be a state that says, okay, we're not going to have this, and now let's market it. And they will do very, very well as the laws start getting passed in other states. Now, they also may, you know, they may put revenue caps on it and say, hey, under this, you don't owe anything. Over this, well, guess what, pay your share. You know, I could see states marketing that as well. But I know, given the current political climates on tax, and I'm going to go all Tea Party on you. I'm just kidding. Given the current political climates on tax, a lot of these states, they don't want to touch it. Even though you can look at it, and I hope no video game people are there, but I can use video games as an example. What's the difference between somebody going and grabbing a box off a rack and accessing it online and actually kind of owning it? You know, we get in that debate, but you look at it and it's the state that's going to say, put down a hard marker that's going to be extraordinarily competitive for you.
Before we wrap up, there's a upcoming rulemaking in August that I want to sidestep for a moment, software sales tax, and just talk about the upcoming ruling that deals with out-of-state companies paying annual sales tax when they're entities that are not actually residing in Tennessee. Can you tell us a little bit more about what's coming up in that?
Sure. So the department has published a notice of rulemaking hearing, which is the first step in promulgating a rule. Obviously, there are statutes and then there are administrative rules that all the departments have. And a notice of rulemaking hearing, it publishes the text of the rule that's being considered, and it gives everybody notice that there's going to be a public hearing on, in this case, August 8th. And the public is invited to comment on the rule that's under consideration. And you can do that in writing between now and August 8th. You can come to the public hearing and speak about the rule at the public hearing, or you can do both. We are currently in that process of inviting comment on that rule that's been proposed that's under consideration. What the rule says is, I think Bo mentioned a threshold. It says if an out-of-state company, a remote seller, like we've been talking about, but what it really says, a remote seller with physical presence is defined by the Supreme Court, has to collect now, and they have. A remote seller that may not have an employee or property in the state, but nonetheless avails itself of our market by selling more than $500,000 in a calendar year here, also has nexus. That's the new part. And that's what's being proposed in this rule. So if you're a remote seller and you're doing a certain level of business here, then you're required to collect the sales tax.
It starts to get at addressing that notion of whether you live and work here and have a Tennessee company, or whether you purely sell here and don't have any presence here. We're going to put everybody on the same level tax-wise.
Exactly. Because someone with more than $500,000 in sales here, they are purposefully in the state even if they don't locate an employee here, for example, or have a storefront here. They're directing their sales here. They're availing themselves of the market at such a level that they're effectively here through, you know, the internet, et cetera. And we believe should collect the tax just like a local vendor with a storefront collects the tax.
News stories report saying that this, because there's only one or two other states that do this right now, I believe. There's one.
There are two other states, Alabama and South Dakota, who have, Alabama adopted a rule that is not exactly the same, but similar to this proposed rule that, again, is up for comment. It's not a rule yet. Alabama's done a rule. South Dakota did legislation that says something substantially the same.
And at least according to reports, the idea is to, again, put everybody on the same level, but really kind of a grander picture is to really entice and force Congress's hand to come up with cross-nation policy on interstate commerce for this sales tax, or at least that's what the reports are.
That's what it's being described. You know, I think what I would say is we believe that there needs to be equality between the brick and mortar, the local seller, and the remote seller.
When does that comment period close?
August 8th.
August 8th, so the same day as the actual hearing. Okay. Okay. I think I'd like to close here. We'll let folks ask questions right after the panel. We have got plenty of time. We've got the room till 9:30. There's a few folks from the Department of Revenue who are here to answer questions, and we've got a CPA in the house, 2 CPAs in the house at least, so they're here. Again, really appreciate everybody taking the time today. This is a very important issue, obviously very current, as this is hearings coming up on this in a month. Stay tuned. Appreciate it. Our next AdvoTECH panel discussion will be in just a couple weeks during the We Build Tech Summit. It's going to be a panel discussion on workforce development. We hope you can make it there too. Check our website, ntc.com, or ntc.com. I wish we had that. technologycouncil.com. And if you're not a member, I encourage you to join. These are great panel discussions. These are just a few that we have throughout the year on a monthly and weekly basis almost. Please join us, technologycouncil.com/ it's on the back of your flyer, /membership. Should have known that. Thanks everybody for coming. Appreciate you